After all, the name of the game is to buy low and sell high. But there's another component that comes in when we're talking about total return, and that's going to be dividend investing. When you're able to buy low and sell high while also receiving dividends on a regular basis, that allows for the power of compounding to take place, which further helps you increase your wealth over time. And if you're interested in seeing my entire portfolio, all the trades I'm making in real time, then make sure you are subscribed as an Edge Plus member and join my Discord community. You can check out the link down in the description below. However, when it comes to dividends, I actually receive dividend income every single month, and it's not necessarily from monthly paying companies. I get it from quarterly paying dividend stocks that pay on different schedules. Stock A might pay in January, Stock B might pay their dividends in February, and Stock C in March, and then we repeat the cycle every single quarter. And in today's video, I'm going to show you 3 stocks where you can do this very thing, and 3 stocks that also have huge upside. But before we do me a huge favor. Show your appreciation by clicking that like button down below. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is Dividend Wealth. Dividend Wealth is a tool I use on the regular, and it is a fantastic tool, especially for those of you that are dividend investors. Here's a look at the dashboard you will see when logging into Dividend Wealth, where you will find some quick picks. You can drill down based on the type of stock you may be looking for. Looking for dividend growth? There's a filter for that. Looking for more mature dividend growers like dividend kings or dividend aristocrats? You can find those easily. But let's say we're looking for some high yield stocks. When we click on that, we get ourselves a list of high yield dividend stocks that have grades and info to help us analyze a particular company. Here's a look at what we will see when we click on one of those individual stocks, in this case, 3M. And you can scroll down even further to find tons more information to help you perform your due diligence. Dividend Wealth is offering a free 14-day trial, and if you use code Roussin, R-O-U-S-S-I-N, they will give you 50% off your subscriptions. So make sure you check out Dividend Wealth down in the description below. All right, let's jump back into our video, taking a look at 3 stocks that will have you earning a dividend every single month. Beginning with stock number 1, which is Merck & Company. Merck is one of the largest pharmaceutical companies in the world today, and they are led by their key drug, Keytruda. The company currently has a market cap of $278 billion, and over the past 12 months, shares of Merck are up just 4%, well underperforming the greater stock market. Looking at the chart, the stock has been on a bit of a free fall since summer, blowing through recent support with the next line of defense around $100 per share, and that's not too far away. Shares of Merck fell rather hard at the end of July when they issued their earnings, and it was not so much the earnings, but rather the guidance that caused the crash. In fact, the company beat on earnings, but updated guidance fell short of analysts' expectations. Speaking of those expectations, looking ahead to 2025, analysts are expecting the company to grow their earnings by 21%, expecting EPS of $9.71, which equates to a forward PE multiple of just 11.1 times, well below the company's 5-year average of 15.4 times, which is also in line with their company's 10-year average. So from a valuation perspective, Merck shares look rather intriguing. Now for the dividend, where you can see the company pays an annual dividend of $3.08 per share, which equates to a dividend yield of 2.8%, and they have a 5-year dividend growth rate of 8%, and they have been growing their dividend for 13 consecutive years. In terms of dividend timing, Merck pays their dividend during the months of January, April, July, and October. And that leads us to stock number 2, which is going to be Starbucks, stock ticker SBUX. Starbucks is clearly a company in need of a transition, and that's exactly what they just did from the top down, transitioning out from the old management team, which only lasted 1 year, and bringing in the top CEO, clearly on the market, in Brian Niccol, who last led Chipotle. This company clearly needs this turnaround, and it's not going to be something that's going to be done overnight, and it's something that has to happen. So expectations shouldn't be for a quick turnaround. And Brian Niccol coming into this job, although he's getting paid very handsomely, it is not going to be an easy task. Starbucks currently trades with a market cap of $109 billion, and over the past 12 months, shares are up 4%, in line with Merck, as they both underperform the market. And if it weren't for the Brian Niccol news, the stock would be fluttering below $80 per share and down big over the past 12 months. But the news shot the stock up to its best day ever. Now, I would be lying to you if I told you I didn't sell some of my Starbucks shares, because it was an opportunity to sell the news. A 20+% increase on a hiring of a new CEO. Now, I love the CEO. I think he's going to be fantastic at this turnaround. But again, this is a turnaround that's going to take a lot of time. The stock does not come without risk, but the upsides are going to be massive. Again, not going to be quick, but it will get done. Looking into 2025, analysts are expecting earnings to grow 11%, as they're expecting EPS of $3.95 per share, which equates to a forward PE multiple of 24.3 times, well below the company's 5-year average of 31 times. But there is no way the company deserves that multiple any longer. So from a valuation perspective, Starbucks shares look okay. Not a stock to back the truck up on, but one to nibble at on pullbacks. In the past, Starbucks was a premier dividend growth stock. They offered great growth potential and strong dividend growth. But as free cash flow has fluttered pretty much since the start of the pandemic, that dividend growth has too slowed, something I expect into next year. In terms of the dividend right now, Starbucks pays an annual dividend of $2.28 per share, which equates to a dividend yield of 2.4%. They currently have a 5-year dividend growth rate of 10%, but that too could drop below that figure. In terms of consecutive dividend growth, management has increased the dividend for 13 consecutive years. Stats again closely aligned with that of Merck. In terms of dividend timing, Starbucks pays their dividend during the months of February, May, August, and November. And that leads us to stock number 3, which is going to be Target. Stock ticker TGT. Target is a big box retailer. And if you were to ask me, of these 3 stocks, Mark, which are you most excited about? Which of these 3 stocks would you buy? And it would be hands down Target. From a valuation perspective, from a turnaround perspective, there's a lot to like moving forward when it comes to Target. And when you look out over the past few years, they have lagged their competition, which is Walmart, in a big way. As you can see here, Target actually had a huge lead after the pandemic, but then all of that came crashing down. And Walmart has seen a slow and steady ascent during that period. Now, looking at that, you could go a few different directions. You could look at Walmart and say, well, I should probably just stick with the one that's outperforming, the clear leader. Or you could take another tune and you could look at Target and say, this is the turnaround story. Look at the potential. If they can, in fact, close the gap, there's a lot of room for further growth when it comes to Target. That doesn't mean Walmart has to falter. It just means Target is going to start outperforming. This situation between Target and Walmart reminds me of the same thing I went through less than a decade ago when I looked at Home Depot, the clear leader in their space, and Lowe's, the little brother to Home Depot. But the gap was so wide, I said, look at the opportunity that's in front of Lowe's. If they can just close the gap a little bit here, that will provide huge upside in terms of stock performance, in terms of improved financials, and that is exactly how it has played out. It doesn't mean the competitor has to falter. It just means that the other Lowe's or the other Target needs to improve, which can provide huge amounts of share price appreciation. Many of you may not even know this, but over the past 5 years, did you know that Lowe's shares have nearly doubled that of Home Depot? That was Lowe's getting a new management team, closing the gap, improving financial efficiencies. Not saying the same is going to happen with Target and Walmart, but it is a very similar setup. When taking a look at Target, they currently have a market cap of $70 billion. And on the year, results have been fantastic as shares are up more than 40%. This has been a resurgent year, posting strong numbers, which is building the case for that turnaround story. In terms of earnings, analysts are looking for improved earnings growth each of the next few years. Looking into 2025, EPS is expected to grow 9%, as analysts are expecting $10.43 per share, which equates to a forward PE multiple of 14.3 times, well below the company's historical 5-year average of 17.2 0.6 times. So from a valuation perspective, even with that 40% climb we've seen this year, shares of Target still look quite intriguing. Now for the dividend. And when it comes to Target, they are a dividend king, meaning they have grown their dividend for more than 50 consecutive years, which is saying something. You need a lot of free cash flow in order to pay not only a dividend, but a growing dividend. Target currently pays an annual dividend of $4.48 per share, which equates to a nearly 3% dividend yield. They also have fast dividend growth, sitting at 11%, and they have grown that dividend for 55 consecutive years. In terms of dividend timing, Target pays their dividend during the months of March, June, September, and December. So with this sheet now filled out, you can see how investing in 3 quarterly paying dividend stocks can still have you receiving income every single month. This allows for more frequent compounding, and I'm a big believer in the power of compounding dividends. So down in the comments section below, let me know which of these 3 stocks would you be more inclined to buy right now. And also let me know, do you earn dividend income every single month? And if you haven't done so, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.